This is an iHeart podcast.
Every business has an ambition. PayPal Open is the platform designed to help you grow into yours. With business loans so you can expand and access to hundreds of millions of PayPal customers worldwide. And your customers can pay all the ways they want with PayPal, Venmo, Pay Later, and all major cards. So you can focus on scaling up. When it's time to get growing, there's one platform for all business. PayPal Open. Grow today at paypalopen.com. Loans subject to approval in available locations.
Thrivent can help you plan your finances for the people, causes, and community you love. What makes Thrivent different? Financial services and generosity programs are combined to help you build a financial roadmap for the future, while also creating opportunities to give back along the way. Visit Thrivent.com to learn more. Thrivent, where money means more.
At GSK, we believe that to get ahead of disease, you need to understand its root cause. And that's why we combine our deep understanding of immune science with cutting-edge technology. It helps us to create targeted therapies that match the right treatment to the right patient, transforming the lives of millions. By uniting science, technology, and talent, we work tirelessly to get ahead of disease together. Visit gsk.com to discover more.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. Straight ahead on the program, the nation's biggest retailers battle it out for your summer spending dollars, and what earnings from Delta Airlines will tell us about travel demand right now. I'm Tom Busby in New York.
I'm Caroline Hepker in London as JP Morgan's Jamie Dimon visits Ireland ahead of the US tariff deadline for Europe.
I'm Doug Krisner, looking ahead to next week's CPI and PPI reports for China.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Tom Busby. We begin today's program with what's become a Black Friday sales bonanza in the middle of summer. Amazon's annual Prime Day July sales event kicks off with Target, Walmart, and others joining in. How much money is at stake? Are Americans expected to spend like we did before? And what role could the Trump tariffs play in sales? For more, we bring in Poonam Goyal, Senior U.S. e-commerce and retail analyst at Bloomberg Intelligence. Poonam, thank you so much for joining us this holiday weekend. Millions of Americans gearing up to spend at the nation's biggest retailers. And this year is a little different, I think. We have a couple of competing forces. A pullback in consumer spending, no doubt. Some people are spending less. And then fears about these Trump tariffs that are scheduled to kick in this coming Wednesday, July 9th. What do you see coming up on these big sales events?
You know, you said it exactly right. Consumers are pulling back and consumers are looking for deals. So what better way to find deals than on Amazon's Prime Day sales, which now is a 4-day event versus a 2-day event historically. Deals matter, and hopefully these deals draw consumers to Amazon to buy what they want.
Now, this is a lot of money. Last year, in 24, this is according to eMarketer, $14.2 billion. And as you said, this was only Amazon had a 2-day sales event. This year, they've stretched it to 4. Do you think we're going to see that kind of spending?
I think spending will be up double digits, including on this Prime Day. Now, the fact that it's 4 days and 2 days, does that mean that you double what you're expected to get? Probably not double, because there is spending that still occurs right on the Amazon platform after Prime Day. But I think what this helps do is, if you think about what's happened since Amazon has introduced Prime Day, is that other retailers, as you mentioned, have followed suit. So Walmart has its deals, Target has its deals, Best Buy, Wayfair, you name it. But these deals aren't just 2 days, they're longer. So by Amazon going from 2 days to 4 days, they're now in play along with the rest of them for a longer duration. I think that's really what helps here.
And Target is 7 days. Walmart is a 6-day event. I mean, they're
Right.
really stretching things here, aren't they?
Yeah, exactly. So, Amazon being just 2 days, I think it's smart of them to go to 4 days. And I do think it'll help them draw higher sales because it is a longer event.
Now, Amazon did something I think really smart this year. They moved up the dates. Last year, I'll say there was a 2-day event. It started July 16th. This year, it's starting July 9th. And that's an important day because that's the day that the across-the-board Trump tariffs are supposed to kick in. And we know anything could change before then. But I think it's a savvy move to move this up because people are afraid. People are worried. There's a lot of uncertainty about those tariffs, how much it's going to change, prices on things, inflation rising. And it looks like everybody else has followed suit.
Yeah, you're absolutely right. Look, that day is clearly going to be an important day, and we'll find out what happens with tariffs. But as tariffs are top of mind on that day, consumers are also at the tip of their seats looking for deals because if things do change and if things get more expensive for the consumer, they're going to want to buy it now. And the Prime Day sale happens to be just that day and for the next 4 days.
Now, this started kind of the dog days of summer. People were not spending a lot of money. It started in 2015 with Amazon, and they've grown into maybe stretching out not only the back-to-school sales, they've earlied those up. I mean, this has really become an annual event along the lines of Black Friday, hasn't it, for all these retailers and consumers?
Absolutely. The Prime Day sale is a big event. It's not as big as Black Friday, but still a very big event. And it comes at a key shopping point in time, right? It's right ahead of back to school. So consumers have the intent to shop, they have the urgency to shop, they have the need to shop. And this year, especially, they want the deals, right? They're looking to spend less and get more. And the only way to do that is to go shop on deal days. And this is one of Amazon's biggest deal days outside of Black Friday.
Now, Amazon now has 220 million subscribers, and really to get the full benefits of these Prime Days, you have to be a subscriber. What kind of deals are we talking about? And are there ones that stick out to you that you've seen that could really have a big impact on sales?
So we'll see the deals this week when Amazon starts launching them. This year they're doing it a little differently. They're dropping new deals every day on different categories. So they're being very targeted in how they get consumers to keep coming back, right? You don't want to go shop the first day and then not come back the second day. So they're being targeted with their deals. In terms of what the deals will be, I think you're going to see the same as you've seen before. You're going to see deals on electronics. You're going to see deals on Amazon gadgets, whether it's a Kindle or any of their other devices. You're going to see them use their Rufus and Alexa AI assistants to help consumers find deals. So that's the real new thing here, is that Amazon is going to try to have consumers lean into these AI tools, not only just to compare products on their website, but also to learn about them, get smarter, and really see the value in them to help them hit that button, buy now.
Our thanks to Poonam Goyal, Senior U.S. E-commerce and Retail Analyst at Bloomberg Intelligence. We turn now to the airline industry with the latest earnings from Delta Airlines out on Thursday, just as the summer travel season is in full swing. Or is it? For more, we're joined by George Ferguson, Airlines, Aerospace, and Defense Senior Analyst with Bloomberg Intelligence. Well, George, thank you for being here. I want to start with what you expect to see from Delta's second quarter earnings this week, which comes after blowout earnings for Q1 3 months ago. But since then, I think we both agree a lot has changed in the industry.
It has, and thanks for having me on. Delta is always the first airline to report, and usually one of the stronger airlines in the U.S. industry, and we'd expect the same this time. I think the big things that we're going to watch is first U.S. domestic travel. We think U.S. domestic travel is probably cooling. It's the biggest driver of revenues, profits for the airlines, and so to give us a good sense for how much that is cooling right now. It's hard for these airlines to continue to push to higher profitability if that market isn't working. And we're expecting across the board that U.S. airlines are going to have lower profitability than last year in the same quarter. We'll also get a first look at Europe during the summer vacation season. That's been super strong for the big U.S. full service carriers, United, Delta, and American. We suspect that this market's going to cool as well, although this is probably because of a slowing economy, the U.S. dollar weakening a bit. We don't think it's going to fall off a cliff, but we just can't see it remaining as super strong as it has been. We kind of suspect that a lot of these travelers book pretty far in advance. I have sort of a joke that on Christmas morning, everybody wakes up, opens their presents, and then decides where they're going to travel to Europe that summer in the well-heeled families of America. And so we suspect that 2Q is probably going to hang in there pretty well, but we'll be listening closely for trends for 3Q and into 4Q because, again, we think there's a bit of a lag that occurs in bookings into Europe. But we still think 2Q may provide some insight into some potential softening in that market. And I think one of the challenges we'll also have as we look at Delta, like I said, is that we're expecting that domestic market to soften, and we'll see some of that in Delta's earnings, but it won't be a good indicator, as good an indicator of what we expect out of the low-cost carriers, because the low-cost carriers really catering to a different clientele. We would expect that anything Delta reports in the domestic industry is going to be even softer when we get to some of the low costs like JetBlue, Southwest, Frontier, those kind of companies.
Well, back to Delta now. They telegraphed this softening back in April, their last earnings report, right, where they withdrew with full-year guidance because of softer demand. And since then, I mean, we've seen more unrest in the Middle East. These White House, policies on migrants, travel bans, the Trump tariffs. I mean, have things even gotten a little worse than even you suspected?
Yeah, I mean, I think that the backdrop is definitely getting more difficult. I don't know that they totally telegraphed more difficult times ahead. The sense I got was at earnings, there was just so many things changing in the U.S., right? Tariffs were being announced. Everybody wasn't sure what it was going to do to GDP. That I think that the companies just decided that it was most prudent, maybe easiest, just to pull guidance for the year. But as we went through the call, there was a lot of discussion about how they hadn't seen the softening yet in many of these markets. But again, I agree with you. I think since then the backdrop has gotten a little bit worse on all those fronts. Again, I think commentary on the back half of the year won't be as strong. We'll be listening very closely for that. But all this takes time to filter through. And so 2Q, we expect it to be okay, not more profitable than last year, but okay.
Now, chances are, if you're traveling this summer, you've already made your flight and hotel bookings. But if not, could that mean right now, it's July, there are solid deals out there for consumers?
Again, I think that some of the shortest distance between booking and travel is typically the domestic market. I would suspect that there's probably some interesting deals out there right now for the domestic market, because that's the one I think will get softest sooner. And then I think, you'll see the airlines discount to try to fill those airplanes. The way we see sort of revenue management at the airlines nowadays, all these carriers traditionally have sort of 80+% capacity of every airplane that flies. Those revenue managers will get out there and try to fill those airplanes at the marginal cost of the seat. And so, like I said, that means you could get some pretty interesting opportunities. I suspect on some of the international travel, long haul Latin America, Asia Pac, and Europe, I suspect still a good amount of those seats have been filled earlier in the year. And so I think you'll see maybe less great deals in the marketplace for those, but you'll probably see some.
Well, Delta Airlines Q2 earnings out this Thursday ahead of Wall Street's opening bell. Our thanks to George Ferguson, senior analyst for airlines, aerospace, and defense with Bloomberg Intelligence. And coming up on Bloomberg Daybreak Weekend, JP Morgan Chase's Jamie Dimon visits Ireland ahead of the U.S. tariff deadline for Europe. I'm Tom Busby, and this is Bloomberg.
Every business has an ambition. PayPal Open is the platform designed to help you grow into yours. With business loans so you can expand and access to hundreds of millions of PayPal customers worldwide. And your customers can pay all the ways they want with PayPal, Venmo, Pay Later, and all major cards, so you can focus on scaling up. When it's time to get growing, there's one platform for all business. PayPal Open. Grow today at paypalopen.com. Loans subject to approval in available locations.
Thrivent can help you plan your finances for the people, causes, and community you love. What makes Thrivent different? Financial services and generosity programs are combined to help you build the financial roadmap for the future, while also creating opportunities to give back along the way. Visit Thrivent.com to learn more. Thrivent, where money means more.
At GSK, we believe that to get ahead of disease, you need to understand its root cause. And that's why we combine our deep understanding of immune science with cutting-edge technology. It helps us to create targeted therapies that match the right treatment to the right patient, transforming the lives of millions. By uniting science, technology, and talent, we work tirelessly to get ahead of disease together. Visit gsk.com to discover more.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, China firms locked in a race to the bottom when it comes to pricing artificial intelligence. But first, Jamie Dimon, chairman and CEO of JP Morgan, visits Ireland this week just ahead of this Wednesday's July 9th deadline for U.S. tariffs, which, if they go ahead as planned, would add 50% duties to most European goods exported to the U.S. Ireland, a major beneficiary of global economic integration, that's according to the finance minister, is aiming to maintain formidable growth while balancing European interest with its traditionally strong relationship with America. For more, we turn to Bloomberg Daybreak anchor Caroline Hepker.
In the midst of a boom in Europe's banking sector, JP Morgan Chair and CEO Jamie Dimon will head to Dublin for talks with the country's second-in-command on trade, tariffs and sustaining economic growth. The banking stalwart will meet with Ireland's Taoiseach, in effect the Deputy Prime Minister, just as geopolitical uncertainty both drives interest in Ireland's Goldilocks business climate, but also could pose threats to its tech and pharma industry. Well, joining me now to discuss is Olivia Fletcher, Bloomberg's Dublin bureau reporter, and here in London, Bloomberg senior finance reporter Laura Noonan. Welcome to both of you and thanks for being with me. Olivia, to you first. Jamie Dimon has raised the alarm on macroeconomic risk, on bond markets, on tariff uncertainty. What do you think he's going to be talking about and thinking about when he's in Ireland? How much is Ireland at risk from all of these?
Well, the big question now is how Ireland can remain competitive. You know, its whole economic model has been based off attracting and luring foreign direct investment internationally, but especially from a lot of US firms. There are a lot of multinational hubs here, Apple, Pfizer, a lot of the investment banks are here as well. And the key is going to be staying competitive because Ireland was basically the envy of Europe. You know, it's got this huge budget surplus. Last year, reaped record 39 billion euros in corporate tax receipts, albeit they are kind of volatile, but that's a huge, huge amount of money that has transformed it from one of Europe's poorest to one of its richest. But now it's kind of making headlines, I guess, for maybe the wrong reasons, because Ireland is now directly in Trump's line of sight. It has one of the biggest trade imbalances with the US, and Howard Lutnick has repeatedly singled out Ireland for its huge surplus. So the big question, I guess, is how does Ireland continue to attract and maintain the foreign direct investment that has kind of funded its coffers, just as Trump is trying to lure so many of those US companies back to American shores?
Laura, a lot of uncertainty then around tariffs and trade and what that means for Ireland.
There is certainly a lot of uncertainty. What I would say is Ireland has tried to tread a very fine line around tariffs and around the current Trump administration. So Ireland's always been in a particular position. I think where it is economically and politically is also similar to where it is from a geographic perspective. It is midway between, it sees itself as being between the EU and between the US. And there has always been close ties between Ireland and the US, some of which predate Ireland's EU membership. So I think Ireland is trying to play a very fine line here. They are very conscious of not wanting to alienate the US administration any more than is definitionally necessary because Ireland does have a low corporate tax base. That low corporate tax base has attracted a lot of multinational activity, a lot of US activity, which the US administration believes should be in the US. So that is a definitional problem. But beyond that, Ireland is trying to position itself as a friend to the US while also being a good European. So you won't see the Irish administration making the same kind of combative statements as what you have seen some of the other EU nations doing. In terms of Jamie coming to Ireland, then Jamie Dimon, JP Morgan Chase CEO, Jamie loves Ireland. That's the first thing to say. There are some
He's visited a number of times.
He's visited several times. There's some Americans who love Ireland. Jamie is one of those. So he loves Ireland. I think he will be stressing the benefits of the Irish economy. He'll be stressing all the great things that the Irish landscape has delivered for JP Morgan. They've already got a couple of thousand people there. One of the jokes about Jamie coming to Ireland is that Jamie will come to Ireland to promise a couple of thousand jobs, and then it's up for everyone else to figure out how to make that happen, or like how to walk that back. Like, he just loves the place. So I think he will be stressing the strengths of Ireland and also trying to encourage Ireland to stay the path from a stability perspective. One of the other assets Ireland has had through the recent geopolitical ups and downs is that there have been a lot of big elections. There's been a lot of political shifts in a lot of big countries, including the UK. So last year we had elections in a lot of major EU countries. We had elections in the US. There was a lot of public talk about that internationally. We also had Irish elections. Nobody cared because essentially they rearranged the chairs in a very similar order to the old chairs. And I think that stability as well has become an asset. So while it doesn't make Olivia's life any easier in trying to excite people about the Irish elections, it does become a selling point when you think about companies like JP Morgan, who in this world of a lot of uncertainty, I think people do look for stability. And I think Jamie will be stressing the stability they have found in Ireland and will be encouraging the country to continue on that route.
And of course, some of these points were reflected in some recent interviews that we've had, including my Daybreak Europe co-host, co-anchor Stephen Carroll, who sat down with the Irish Finance Minister Pascal Donoghue when Bloomberg opened its brand new bureau in Dublin. So have a listen to what Donoghue had to say.
We've a growth outlook for our economy even now of 2, maybe even more than 2% per year. The reason why these companies have part of their global supply chains here in Ireland is because we've the skill, the experience and the competitiveness built up to keep them in our country. And we will look then at how we can maintain that even if the trade environment around it does begin to change.
So quite a rosy vision then for Ireland's economy, despite the trade worries from Donoghue. Olivia, in terms of, the reliance, as you say, on corporate tax receipts from sort of large multinational companies, and also what the government is going to do with the budget surplus that it's got in terms of setting up a sovereign wealth fund, what are the next steps for the Irish government?
Well, like you say, the picture is perhaps not as rosy as it once was. Pascal Donoghue's finance department has revised down its domestic economic outlook, and so has the central bank. They're kind of saying that while Ireland will still see a surplus, the surplus might not be as high as, it was once anticipated to be. And so the next steps for the Irish administration are, like they say, to continue to keep that competitive edge. The finance department and also Ireland's Foreign Direct Investment Agency, the idea they're keen to stress that while Ireland has in the past kind of attracted these companies because they are a strategic tax base, Ireland also has a hugely skilled workforce. And like Laura said as well, actually, when I went to see the IDA recently, when their press conferences, their chair said that Ireland stands out as an oasis of stability to investors. So I think the key thing for Ireland is to, remain stable, which seems like that's something they'll be able to do, and to continue squirreling away some of that money into the sovereign wealth fund, because Ireland isn't just thinking about the next 3-4 years. The problems potentially could come, 10 years down the line when, for example, a company might not pull out of Ireland right away, but they might just decide not to invest in a pharmaceutical plant in 10 years' time. So the issue isn't necessarily that all these companies are going to leave right away. It's that what might just not be there in future, which is harder to measure. And so, Ireland is having to look at all kinds of other ways to continue to attract companies, but also invest more in research and development. That's quite another thing that's high up on their agenda, things like that.
Laura, to bring you the context also amidst all of this is that European banks have done incredibly well in the first half of this year. So there's also that context to kind of bring into this, that European banks are again sort of back in focus.
Yeah, I mean, Irish banks are a bit of a different sector to European banks in the sense that what's happening there partly reflects the reprivatisation of the market. Ireland is a very particular banking market, so there are basically two very large banks, AIB and Bank of Ireland, who dominate the market. One slightly smaller bank. AIB has just returned to fully private ownership. That has put a lot of wind behind Ireland's sails. So I think it's a bit of a different sector. The Irish banking sector has gone well, but they also had obviously a very problematic legacy, and these things do tend to go up in ups and downs. So because they lost a lot of money, they then tightened their standards a ton. I mean, if you think about underwriting standard, Ireland probably has some of the toughest. We have very tough mortgage rules. All those things do mean that the sector should outperform. So I think the domestic bank sector is going very well. I did want to say a word on the foreign banking sector as well, though, in terms of next steps and what Ireland is doing. So Ireland will shortly launch its next international finance strategy. They launched their last one in 2020. This is basically their strategy to make Ireland a go-to destination for international finance, and that will see them tackle some of the structure, or they've certainly been lobbied on some of the structural points. Those are things like infrastructure. Anyone who's been to Ireland will know that we do not have a metro from the airport, which has been a bone of contention. I first wrote about it in 2004. So there has been there's housing, there's some issues around tax, both in terms of funds taxation. We talk a lot about banks, but funds are a big industry in Ireland. Issues around that, issues around the banking bonus tax. So there are policy issues for the international finance sector and the international sector more broadly, because we all care about housing and infrastructure, which I think Ireland is going to commit to tackling quite soon.
Olivia, a last thought. As with all the other European countries, Ireland is also under pressure to continue achieving strong economic growth. Can they continue to deliver that?
So the forecast from the Department of Finance and the central bank suggests that Ireland will continue to grow, but at a slower pace. So while Ireland may continue to grow, like Laura said, there are a lot of roadblocks to that actually some of the biggest points that the multinationals have raised with Ireland, things like fixing infrastructure, energy grid, increasing housing starts, water supply. So while Ireland is probably going to continue to grow, there are definitely roadblocks to that, and that's probably Ireland's biggest challenge right now.
Yeah. So in terms of the economic growth picture, your view, Laura?
Yeah, so I think without putting too much of a green jersey on, it is worth saying Ireland had the fastest growth rate of any country in the EU in the first quarter, and is expected to have one of the highest growth rates economically. So while it will be lower than it has been, it will still be one of the highest in the EU.
Yeah, absolutely. Laura, thank you so much for being with us today here in the radio studio. Bloomberg senior finance reporter Laura Noonan, and in Dublin, our Dublin bureau reporter Olivia Fletcher. Thank you.
Thanks, Caroline. And coming up on Bloomberg Daybreak Weekend, how China's AI dragons risk choking each other.
Whenever a new craze emerges, there's always just so many rivals that sort of come out of the woodwork ready to pounce. And now these sort of same forces are really in full swing in the booming artificial intelligence industry. And these AI firms have really been focused on this sort of classic playbook, which is scaling up their user bases and racing for market share.
I'm Tom Busby, and this is Bloomberg.
Every business has an ambition. PayPal Open is the platform designed to help you grow into yours. With business loans so you can expand, and access to hundreds of millions of PayPal customers worldwide. And your customers can pay all the ways they want, with PayPal, Venmo, Pay Later, and all major cards, so you can focus on scaling up. When it's time to get growing, there's one platform for all business. PayPal Open. Grow today at paypalopen.com. Loans subject to approval in available locations.
Thrivent can help you plan your finances for the people, causes, and community you love. What makes Thrivent different? Financial services and generosity programs are combined to help you build a financial roadmap for the future, while also creating opportunities to give back along the way. Visit Thrivent.com to learn more. Thrivent, where money means more.
At GSK, Our focus is on doing the right thing for patients. We believe they should be free to focus on doing what they love, especially when they're living with a disease like cancer. That's why we focus where we can make the biggest difference, matching the right treatment with the right patient. At GSK, we're pioneering advanced technologies like antibody drug conjugates that precisely target and attack cancer cells. By uniting science, technology, and talent, we work tirelessly to stay ahead of cancer together. Visit gsk.com to discover more.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Recent data out of China providing an ambiguous read on the health of the world's second largest economy. With that, investors will be closely watching the next round of inflation data out of Beijing. And for a preview, let's get to the host of the Daybreak Asia podcast, Doug Krisner.
Tom, many recent data points for the Chinese economy have been mixed. In the last week, the Caixin manufacturing PMI for June seemed to improve into expansion. Bloomberg Economics says this is a reflection of the truce in the U.S.-China trade war. However, the latest flash reading from China Beige Book International shows slowing in June. Most sectors, according to China Beige Book, weakened as the result of declining revenue and profits, as well as falling prices and fewer hirings. Now, in the week ahead, we'll get fresh data on inflation in the form of both the consumer price and producer price indices. For a closer look now, I'm joined by Shahzad Kazi. He is the COO, also managing director at China Beige Book International. When we talk about price activity in China, I'm tempted to use the term deflation, but maybe that's a bit overused. Can we still use that term to characterize what's going on the mainland?
If you look at the producer side of the equation, there's no question about the fact that there has been deflation in China. And it's tied into the whole concept of excess capacity and companies having to cut prices to sell and so forth. But if you look at their CPI measure, and especially if you look at core CPI, what you have got going on in the official data even is a lot of disinflation rather than outright deflation. But the problem is that there is a profitability challenge in China, and fundamentally there's a price war going on in so many sectors that's what's, I think, depressing a lot of those indicators.
So is this merely an issue of overcapacity, or is there something else that we need to unpack here?
A lot of it is certainly overcapacity. Chinese industrial sector has produced so much, whether it's you're talking about steel, aluminum, copper, whether you're talking about cars or EVs now, that every company feels a pressure to cut prices in order to sell domestically, and even more importantly, to sell abroad, which is where Chinese overcapacity problem comes in. They cut prices to the point where every other country's companies tend to not be very competitive, and that's how they flood their goods. But ultimately comes back in the form of weak industrial profits, and comes back in the form of this disinflation or oftentimes deflation challenge that we're talking about in China.
Is there an effective policy response Beijing should employ to kind of begin to turn things around? Or is it more a matter of things being in place right now, but global markets need to be a little bit more patient?
So there's no question, this week we got some policy statements out criticizing these price wars and saying we have to push back on them by authorities in China. But, the reality is that there is no incentive structure there. As a matter of fact, the incentive structure is the quite opposite. There's no pressure ultimately on many companies, especially large state-owned companies, to turn a profit ever. And so as long as you have access to cheap or free loans from banks, or that Beijing is going to bail you out, there's absolutely no desire to say that we cannot do these price cutting. As a matter of fact, the whole reason you've got this price cutting is because so many sectors are overly subsidized in that country.
When I think of problems with price activity, I think of the property market, where in many cases prices are continuing to decline. Is that still the case?
That is unfortunately the case, where you had a brief period here where prices were beginning to rebound. And even though year over year they were looking weak, the weakness was certainly starting to dissipate, I would say. That is going away, and you are getting reports, at least directionally, saying that prices are again starting to decline.
Based on the data that you have access to, what are your expectations for the CPI and PPI prints that we're going to be looking at in the week ahead?
Look, if you were to base it strictly on what we're seeing here, where we're seeing outright, slowdowns in our sales prices indices and our input cost indices, that tells us that the CPI and PPI prints, we should get lower prints there. We should probably get, CPI falling and PPI probably contracting further.
But this is nothing really that the central bank can address, or can the PBOC change policy in a way to kind of reverse this? It seems to be coming back time and again to the issue of sentiment, whether you're talking about consumers or businesses. The sentiment levels have been just too weak.
That's exactly right. The sentiment levels have been too weak. And the problem is that monetary policy in China for a while now has not been producing the kinds of results you would expect it to. And by that, I mean that interest rates keep coming down, yet companies, generally speaking, are not particularly inclined to borrow. So in May, for example, we saw this nice jump, a multi-year high from a monthly standpoint in our borrowing data. It came back down to earth in June. So you don't have this sustained rise in corporate borrowing for several years, over the last almost 5 years, as a matter of fact now, because the economy overall is quite weak. So if you're not investing a lot, if you're not hiring a lot, if that R&D isn't there, the desire to borrow is not going to be there. It makes no sense to leverage up.
In a moment or two, we're going to be talking about the AI story in China. When you look at the degree to which tech companies, particularly those that have been playing in the AI space, have been contributing to growth, is that moving the needle in any way?
Not in any kind of meaningful way where you would see it showing up, I think, in big macroeconomic data points. But the reality is, on the ground, the environment is very exciting. China is doing what they've done with, for example, EVs and other sectors. They are increasingly figuring out ways to subsidize the indigenization of chip production, AI, quantum, etc. So they're throwing a lot of money at it. You've got companies that are IPOing in these fields. So certainly in China, the tech space and the tech industry is having an exciting moment.
Shahzad, we'll leave it there. Thank you so much. Shahzad Qazi, COO, also Managing Director at China Beige Book International. And as I promised, let's shift gears. China's crowded AI landscape is not only fueling rapid innovation, but fierce competition as well. And it's that competition that seems to be dragging down profits. Let's check in with Bloomberg opinion columnist Catherine Thorbeck. She covers all things tech in Asia, and she joins us from our bureau in Tokyo. Catherine, thank you for making time to chat with me about this. Give me a sense of perspective on this. How recent has this kind of tension between innovation and competition been developing in AI in China?
This is really a story we've seen play out many times in the history of China's tech sector. Competition is notoriously fierce in the world's second largest economy. So whenever a new craze emerges, there's always just so many rivals that sort of come out of the woodwork ready to pounce. And for example, we saw this in the food delivery market. There's some food delivery wars that were going on, and it really became a race to the bottom when it comes to pricing. We saw bubble tea being sold for less than 25 cents last month. And we also saw it in the electric vehicle market, which has sort of left behind a trail of zombie cars. And now these sort of same forces are really in full swing in the booming artificial intelligence industry. And these AI firms have really been focused on this sort of classic playbook, which is scaling up their user bases and racing for market share. And the result has sort of been this rat race. They're at each other's throats when it comes to pricing, and it's really become a race to the bottom. But I think a key difference here is that nobody has actually has really cracked the key to getting consumers to pay for these services. So it makes the issue of monetization or a path to profitability seem a really long way off. And this is really unique to China's tech sector. In the States, there's in Silicon Valley, there's sort of a smaller number of large players that really dominate the market, and they really have control over pricing. Whereas in China, there's just so many smaller players, and as well as the big tech companies. So competition has been really, really fierce, and I'm just not sure how sustainable it is.
I'm just wondering, when you talk about big tech companies, I think of Alibaba, and you would expect maybe that company or companies like Baba to have some sort of advantage.
That's right. So Alibaba and ByteDance and Tencent, these sort of big tech players, I think they really can play the long game, and they can sort of weather this storm a little bit better than these so-called little dragons, which are these sort of startups that are really driving innovation in China's tech ecosystem. And so I think the big tech players are definitely in a better position. But I also think that's a little bit unfortunate, because we really see sort of the biggest breakthroughs in AI come from these smaller startups, which I think are at higher risk here.
Does the government have a view on what's happening, do you think?
So I think post DeepSeek, there's just been a lot of exuberance. There's been a lot of top-down support for the AI sector. And so it's sort of driving this. And in some ways, it's a double-edged sword, because there's so much excitement for AI and so much top-down support. It has really been driving widespread adoption of AI services and AI tools throughout China, which the government wants. But I think it definitely puts these companies in a crunch when it comes to sort of figuring out how to make money.
So when you talk about adoption, is it primarily on the part of consumers using more AI-related devices, or is it in industry as well?
That's right. So I think consumers definitely demand for AI services and tools is red hot. We see so many chatbots, so many people using DeepSeek across, local governments and across even hospitals. So I think the adoption has been widespread. And the way I kind of look at it when we talk about this sort of top-down support was, I'm not going to remember which U.S. president it was, but there was a president that put electricity in the White House to sort of signal that this technology is safe and we can, rapidly adopt it. And I think there have been a lot of top-down signals coming from Beijing and coming from Xi Jinping about how AI is, the future and we shouldn't be afraid of it. And I think we've really seen that play out when it comes to consumers really sort of embracing this technology and not being afraid of it and sort of rushing to adopt it.
One of the big questions in the States as it relates to the investments being made in artificial intelligence is the ROI, the return on those investments. Do we have any visibility into whether or not this is having kind of a similar conundrum in China right now?
Right. So I really think that's sort of the biggest existential threat hanging over sort of the entire AI ecosystem in China is that there really is not a clear path to profitability, and there's not even a clear path to sort of monetization and making money off of consumers. So many of these chatbots are being offered for free, and because, competitors are offering them for free, it basically peer pressures all of the companies to do the same. And I think there's one statistic that our Bloomberg intelligence colleagues wrote, which was that I think all of the top 10 AI chatbots in China generated just $1 million in revenue from Apple's iOS App Store in 12 months. And during that same time period, OpenAI's ChatGPT garnered $669 million in iOS revenue. So that's quite a big difference. And that's just one chatbot compared to 10 of China's.
So what do we know about the rate of failure here? I mean, do we have enough data to begin to kind of quantify that?
So I think it's too soon to tell. Like I said, there's, this top-down support and there's just this insatiable hype, especially in the wake of DeepSeek. And I think for now, that's been a really strong propellant of the AI sector. A former government official in China last week said that the nation is on the cusp of generating more than 100 DeepSeek-like breakthroughs. But I think, if you look at more than 100 DeepSeeks, what does that actually mean? That means such fierce competition. And so I think in the long run, we may see at least 100, zombie AI tools or zombie AI agents. But I think, that's still a long way off. And for now, this hype is really driving a lot of exuberance. But we'll have to see how it plays out.
Catherine, thank you so very much. It's always a pleasure. That is Catherine Thorbeck, Bloomberg opinion columnist. She covers Asia tech for us here at Bloomberg. And I'm Doug Krisner. You can catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcast. Tom?
Thank you, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.
Every business has an ambition. PayPal Open is the platform designed to help you grow into yours. With business loans so you can expand and access to hundreds of millions of PayPal customers worldwide. And your customers can pay all the ways they want with PayPal, Venmo, Pay Later, and all major cards, so you can focus on scaling up. When it's time to get growing, there's one platform for all business. PayPal Open. Grow today at paypalopen.com. Loans subject to approval in available locations.
So, have you heard the story about the prescription plan with savings automatically built in? It's where a family of any size can feel confident the cost of their medication won't hold them back. Go to cmk.co/stories to learn how CVS Caremark helps members save just by being members. That's cmk.co/STORIES.
What does being financially invested sound like? A retiree on a cross-country drive? Someone with new long-term goals? A student getting their start? With over 450 ETFs, iShares gives you access to countless market opportunities. iShares by BlackRock. The market is yours. Visit www.iShares.com to view a prospectus, which includes investment objectives, risks, fees, expenses, and other information you should read and consider carefully before investing. Risk includes principal loss. Prepared by BlackRock Investments, LLC, member FINRA.
This is an iHeart podcast.